Hello and welcome to another video. Today I thought it would be a good idea to try and teach you about candlesticks, because obviously we're going to be looking at charts quite a lot. We're going to be analyzing charts and looking at all of them really. So like obviously your stocks, crypto, forex, indices, all of that sort of stuff, and every single one of them has charts that I'll be looking at, and every single one of them I'll be looking at the candles and the candlesticks. So like I say, I thought it'd be a good idea to talk about them. So we're going to do a what are they video on candlesticks. I thought it'd probably be easier to do it on paint, so I've actually drawn some candlesticks and I'm going to talk to you about basically. The whole point of this, obviously I know there may be some people who have done their own research and know what candlesticks are and such, but either way I'm going to talk about. So these all look different. All of these candlesticks may look different, although they are all candlesticks. They do represent different things. I'm going to try and go over what they actually are. So to begin with, this is what a typical candlestick looks like, or these are obviously two candlesticks. You can see one is green, one is red. Green typically means positive, as in the price has gone up. Red typically means that the price has gone down. Now on different platforms that show different charts, they may actually appear different colors. So for example, on TradingView you can actually go into this and actually change the color of it, and it'll be black, have a black background, and the actual candlesticks will be different colors. I can't remember what they are. Like for example, an LCG trader, blue candlesticks and red candlesticks. Again, blue is positive, red is negative. I've got an open trade there. This is just a demo account, so just ignore this. This is just me having a little bit of a play around. We'll come on to that later on. But for now, candlesticks. So you have green and red candlesticks. Of the candlestick itself, this is what's known as the body. So this section here. So this is the body of the candlestick, and these bits here are the wicks. So body, I'm going to try and draw this. Wow. And wick. So those are two definitions to understand body and the wick. Now what these actually mean, because as you can see on the charts, is you can see that there's all sorts of different shapes and sizes of candles, the candlesticks, and you can see that the wicks sometimes are massive, as you can see here, and sometimes they're absolutely tiny. So what that typically means is the body of the wick is the price change from the start to the finish. So say for example, we've got a candle like that. I'm going to change that because I'm very particular. We've got a candle like that, it's green, so it's positive. So what this candlestick represents, say there's no wicks on it whatsoever, what this candlestick represents is that the price started here and the price ended here. So throughout that period, whether it's 1 hour, 2 hours, 3 hours, 1 day, a minute, 30 minutes, a week, whatever that represents, we know that at the start of that time period it started here, and at the end it finished here. Now if this candlestick was red, then we know that the price has gone down. So what that indicates is that this is the start and this is the finish. The top is the start and the bottom's the finish. That's because as it's hit this time period, it's hit this next hour or day or whatever, and it's gone and down, and it's finished there. So the hour's finished, and now we're on to the next candlestick. That's what the body actually represents. It represents the price change from start to finish of the day. Now, the wicks themselves, they actually represent the highest and lowest point of that time period. So say, for example, we'll look at this one now. So this one, we know that every time the body of the candle is where it starts. Now, obviously, like I say, if it's green, then it means it started at the bottom. If it's red, it started at the top. So we know this one's green, and we know the day started here. Now, what this candlestick tells me is that throughout this period, whether it's a day, an hour, so on and so forth, that it started here, and the price throughout the day has gone either down and then up to finish here, or potentially it's gone all the way up, it's gone down, and it's gone up again. But most likely it's gone down and then up to finish like that. So the body, I'm actually going to do a text box because I'm not going to be right. The body represents the price change on the time period, and I'm going to do that in black as well. And then the wicks depict the highest and lowest price on that time period. So just a quick recap, the body represents the price change on the time period, whereas the wicks tell you where the highest and the lowest points on that time period are. So now we go on to this one. Now you can see that there is no body, or what looks like no body, when in actual fact this bit here is the body. And obviously you can see that it's got quite long wicks. Now what this is actually telling us is that throughout its time, this time period, let's say this is 1 hour, what it's telling us is that the price has started here and it's gone up, it's gone down, or it's gone down and up, blah 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 blah, but it's finished on the same point. And so there's next to no body, or there isn't a body, but there's quite high wicks. Now you can also get one that's got little wicks, or it might not even have wicks at all, and it might just be a straight line. I'll try and do that properly. It might literally just be a straight line, like that. Yeah. Again, if it's got no wicks at all, then it means that that price has started at that point, and over that time period, it's not moved at all. That's what that would be telling us. But for this one, like I say, the price has gone up, or it's gone down, and then it's gone the other way, and it's finished exactly on the same point again. Now for these next ones, there is no secret about these whatsoever. These are just different examples of what candles could potentially look like. Now with this one, again, so you know it's green, so it starts at the bottom. Now price has probably gone all the way down and then got up again. And then with this one, because it's red, started here, started at the top, and it's gone, well, it's probably gone all the way up and then come back down again. I'll let you work this one out on your own. Nah, joking. So this one starts here, and it's probably gone all the way down and then back up again to about here. So that's the very basics of candlesticks, pretty much. Yeah, so you've got the body, which represents the price change throughout the time period, the start to finish point basically. And then you've got the wicks, which are these. Now the wicks depict the highest and the lowest price on that time period. So if it's an hour, then it's gone all the way up, all the way down. This is the lowest point, this is the highest point it's bit, and this is the actual movement that it's made during that period. And then you could have these ones where it doesn't look like there's any body at all, and this basically tells us that the price has stayed the same throughout that 1 hour time period. It may have gone all the way up and all the way down, but from the start to the finish, it's ended up in the same place. And then you've got these, which are just other depictions of how this would look, and this one as well. What I now want to do is I want to have a little look at the charts. Have a look on TradingView, and we're going to have a little look at the Great British Pound versus the Japanese Yen, aka GBP, JPY. So as you may have noticed, I did have a little trade going on this. Again, like I said, it's just a practice account, but I don't think it's actually going to come through. And I came to a decision about this trade from looking at the charts and looking at the candlesticks. Obviously, if it's not going to actually come through or work, then perhaps I read them wrong, but I've still set myself a bit of time. Anyway, so with candlesticks, you can actually do technical analysis. Now, technical analysis is where you look at a chart and you can look at candlesticks, you can look at candlestick formations, candlestick patterns, and you can figure out or get some sort of hazard of a guess as to which way the markets are likely to move, or which way the technical analysis tells you that the market should be moving. Now, there's lots of different things you can look at, lots of different indicators. TradingView's fantastic for it. I mean, there's all of these. Now, I haven't got a clue about what these are, but at some point I'll have a little look. I know there's stuff like oscillators, and I know there's a Fibonacci, bits and pieces. Now, at some point I will learn it, but in the meantime, I'm not using real money for my trades. I'm just doing practicing. I'm just trying techniques, bits and pieces, and learning. Now, from the knowledge that I have from candlesticks and charts and all that sort of stuff, I actually learned from a company called Baby Pips. Now, Baby Pips is free, and it is, or when I was doing it, it was free anyway. But basically, what it is it will teach you everything about charts and doing technical analysis and all that sort of stuff. Now, this is it. So the School of Pipsology, it is absolutely massive. It is huge, Pipsology. There is so much. Now, I have done some on a different account, but yes, I would say this is definitely 100% worth having a look at, just to give you a bit more of an understanding, or at least the basics of what charts are and candlesticks, candlestick formations, because there is a hell of a lot of them. Candlestick patterns. Let me just show you. I mean, all of these. There's just absolutely hundreds and hundreds and hundreds of them. And they all mean different things. And they all like to give you a bit of an idea of where you think the market's going to go. And that's on the smallest scale. I'm only just sort of learning about some of these. But then it goes on to seeing like 50 or 40 candlesticks in one formation making some sort of shape and telling you, this is where it's actually going. So, I mean, I've got a long way to go. But Baby Pips is what I would really recommend. I will be going back to Baby Pips actually, but not yet, because I've got lots of other things to try and learn about. Number one is how to make YouTube videos. I'm still learning about that. So anyway, candlesticks. So with these candlesticks, you can see, like I say, you can see completely different shapes, and you can, from seeing this paint slide and what they mean and the very basics of it, you can get a bit of an idea of where the price has actually gone. So for example, you know that with a green candlestick, if it's green, then you start at the bottom and then go to the top. Now you can see that little wick at the top there. So it's obviously gone up, it's hit the wick, it's come down, it's finished there, and the new candlestick has started. And it's gone, it may have gone down, actually it would have gone down. So because of that wick's come down, it started here, price has likely gone down and then up and then stopped, and then it's red, so it started at the top and then this candlestick shows a lot of movement for some reason. So it's gone all the way up, down, and probably stopped here, start on the next candlestick, which has continued down and fluctuated a little bit, and then price has changed, gone up. So something, another bit of terminology for you to think about, and I'm going to go back onto Paint. Another bit of terminology to have a little think about is the words bearish and bullish. Bearish and bullish, or bull and bear. So bullish and bearish will tell you whether the markets are going up or down. Basically, it's what traders use. It's basically their slang as to which way the market's going. So bearish means it's going down, because when bears attack, they slam their feet down, and bull or bullish is when the market's going up, because obviously as they're ramming into something, they lift it up with their horns. That's the best way to try and remember it, basically. So if you ever hear someone saying, "Oh, that the markets are looking a bit bearish," it means that the markets are looking a bit poor. That it looks like they're going down. Or if someone says the markets are looking really bullish, then it means that the markets are going good. So if you look here, so say from about here to here, then you would describe this phase of the market, or this trend, as being a bullish trend. The other one would be from here to here, so you might be looking from here to here, and that is bearish. That means the markets are looking sad, it's going down, it's looking pretty bearish. So those are some more terms to think about. Fuck me, my cat's just had a massive shit. Woo! Fucking hell. Well, that's put me off. I'm not going to go through candlestick formations with you today, because what I will probably do is I will probably update you, or try and show you as they arise, and as I start to notice them. That was the other thing I was going to say. I was actually going to talk about this trade and why I think it's going to happen like that. So, I lie. I will tell you about some formations, etc., etc., or things to look out for. So, I have done just a little bit of technical analysis on this chart, the GBP, JPY, which we have spoken about. All I've done is I've put lines in. That's it. And obviously you've seen me put some lines in before, but here they are. So, like I said before, you've got resistance and support lines, and this is what's known as a channel, because that's where the market trend seems to have gone. Now, it's coming up to this pretty strong resistance line here, and as you can see, that's where we're at. Yeah, so it's gone up here, it's hit this resistance line, it's come down, it hasn't quite reached the bottom one, but it's come back and hit it, it's hit it again, and it's come down, it's touched this support line here, come up, hit that resistance line again, and it's come down, touched the support, and now it's come up and it's hit this resistance line here. So what we could be looking for, or what we now look for, is we now start to go lower on the chart. So up here you can see the different time frames. Now, like I said, each candle represents a period of time. So at the moment I've got it on day. I was looking at it on the week. So this is what it looks like on the week. So one candlestick is 1 week. And then obviously, as you can see, so like down here we're looking at 2020. Going up, 2021, 2022, 2023 now. Yeah, so each candlestick represents 1 week. Now each candlestick represents 1 day, so it gives you a bit more information about what's going on. And then we look at it on the 4 hours, just to get a bit more of an idea of where the market seems to be moving. And then I'm going to have a look at it on the hour. So this is what it looks like quite close up. So if I zoom out, you can see that's the very top of that diagonal line that I put in. So as you can see at the top here, it seems to have come up. Now it's hit this line once, twice, 3 times, 4 times, 5 times, and it's come up. Yeah. Now, when you have a resistance or support line, so this is obviously the support line for now because the price at the moment is above that, so it means that is a support line. Yeah. So it's, as you can see, it's come up, it's burst through it, it's come back down, it's tested it, it's come back up, it's tested it again. So what they call this is, if it's hit twice, then they call that a double bottom, or if it hits the top, they call it a double top. Now what that means is that the price has tried to go through that support line, but it's failed, which means that must be quite a strong support line. So chances are that it won't be able to break through again. But what it's done this time, as you can see, is it's hit it 5 times. Now if I saw that before, then I would have actually suggested creating a trade or opening a trade for price to go up. But it's so much more complicated than just going, oh yeah, I think it's going to go up, boom, let's make a trade and let's do it. Because I've done that and I've failed, and going back to the drawing board again. What you have to do, there's so many things you need to look out for. You need to make sure that it's going to come back for a test, and once it's tested and resume past, and perhaps once it's gone past its point there, then you're going to want to look to open a trade, but at the same time you need to look for your exit point, and so on and so forth. So what I have done is I've seen that price has gone up and it's hit this resistance line. Now before it, obviously it's on an upward trend. Yeah, it's on an upward trend, which means that it's still a bullish. This is still a bullish chart. Yeah, because this, when we look at on the long term, this is very bullish. Yeah, it's going up, it's still going up, but when we look at on here, we could potentially see the start of the end of the bullish run. So what we can do is we can have a look at the chart closer up, and we can now see that we've got a double top. So it's hit once, it's come back down, it's tried it, and then it's hit it again, tested it, and it's even broken through quite hard actually. Yeah, and then it's come back down, it's tested the support line here. So this is the important thing, is it's actually tested the support line, it's come back up, but it's failed and it's come back down. So what this tells me, or what I would be looking at just from that information alone, is number one, so it's made a higher high, it's come back down, it's made a lower high, and it's gone back down, and it's made a higher high, but now it's come back down. If it comes back up, what I would be looking for is I'll be looking for it to test this resistance line, and if it fails and it comes back down, I would then look for it to finish here, to potentially reset a little bit and come back down. If it does, then what we've now got is we've got a lower high, because at this point here, we just draw a line. So if it comes up and tests this line, say it finishes here, yeah, and then it comes back down, goes like, say about here, and then comes back up to finish going down like that. What we've got here is a lower high. So obviously this is a higher high than this is a higher high than that, although this is a lower high. We still have higher lows. So that's higher low than that, and that's a higher low than that. But this here already is going to be a lower high. What we're looking for is this to reach here, for it to be a lower high here, lower high than this one, and then we'll be looking for another lower high here. If this does, then this gives us a clear indication that a reverse of the trend may be happening. Yeah, so this might be the start of the end for the GBP JPY bullish run. Now, if that is the case, then what we would be doing, and this is something that I really need to try and teach myself, is that what we'll be looking to do is to make a trade from a sensible position. We know this is a resistance line, and we know this is a support line. We know that if it tests this and comes back down and attempts perhaps just a little bump up and then drops back down again, we can look to open a trade about here. Yeah? Which is what I've done, but I couldn't wait basically. So my trade starts here. Is, as you can see, about here. Yeah? But I was expecting it to go straight down to here. But obviously it hasn't. It's come back up, and then we've got we've got this nice green candlestick here, so that's sort of showing that it's still a bit of resistance that it still wants to go up. So what I need to do, like I say, wait for it to come up, test it again, perhaps come back down. As soon as it goes back up, and as soon as I start seeing again the track of it going down, then that's when I want to open a trade. And basically make a trade saying that they call it a short. I want to short this. Now short basically means to sell, and so a short position is when you're selling or predicting that it's going to sell, or you have a long position, which is where you are basically predicting that the price is going to go up. So shorting is where you're predicting price to go down, and long is where you're predicting the price to go up. So I would then create a short position, and we'll be looking for price to go down to hopefully about here, and if not, then even more so. So I'm going to leave it there. This is super important to learn about all the candlesticks. Once you've figured out, or once you've learned what all of this means, all the different wicks, the different sizes of the wicks, different sizes of the bodies, once you've learnt all of that, then that will lead you on to the next stage. But like I say, I would seriously suggest having a look at baby pips, because it's just fantastic, and I will be going back on it again to do some more learning. But for now, I'll leave you with that, and bye.